Good morning, mate.
Hello, mate. We're live on Facebook and Twitter, so
Oh, right
don't
now.
swear. Yes.
Oh, okay. Oh, right. Okay. Well, that's exciting.
Yeah, I had to press that button just to make sure it worked.
How are you, mate?
Yeah.
Hey,
G'day,
Yolanda, how
Orlando.
you doing, buddy?
I'm fine, thank you. How are you, mate?
Yeah, very good. Very good, mate. Thank you.
Don't you swear either, Orlando.
What?
That's gonna be more of a challenge.
What is
We're
going to
live
be more
around
of
the
a challenge
planet
to
at the
get me
moment,
on the
mate.
show?
So just having a little chat before we go on here officially, which we will. I think we'll do it. Why don't we do it?
Yeah, let's do it, mate.
I don't have to press any more buttons. I think we're live all over the place. So I will officially say, Heidi ho, everyone, and welcome once again to this Learn to Trade live and free. This is the UK Open session, and you've got me today in the chair. It's Jeff. Joining me as always, well, except when we're on holidays, is Ash. G'day, buddy.
Hello, mate. How's things?
Mate, it's absolutely, I was going to swear. It's not very nice weather here at the moment. We're having a dreadful day, blizzard conditions.
Oh, it's lovely here, mate. It's nice and warm. I've already been in the sea for a little swim. It's
Awesome.
it's packed down there as well at the beach. There's loads of people down there.
Oh, that's
Really?
good. Social
No one-
distancing doesn't matter anymore then?
Oh, do you know what? There's I mean, there's a lot of people, but everybody's respecting the social distancing, particularly the people in the morning that go down there. There's loads of room. I mean, when I say there's loads of people, relatively speaking, to this time of day, you know, it's only just
And
hitting 8 o'clock. I was down there at 6:45.
And I also heard that the sea has some healing properties.
Yes, mate. Oh, I
And
don't know about
those of you-
against the coronavirus, but it does
Those
have
of you who
healing.
don't recognise the voice coming to us from another part of the world, where it is what time, Orlando?
Right now it's 1 a.m.
Beautiful. Glad you were.
super
glad you
warm,
stayed.
super hot in here.
It's always, isn't it?
Actually, not. It's super hot. It's hot as hell, like I told Ash last week.
Okay, well, you're in an appropriate place then. I'll put it that way. I'll wait till you digest that one. We've got a few things to discuss today, and obviously, as you can see, three of us in the show, we're going to be very, 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 very busy. Actually, have you got anything that is urgent?
No, I haven't, mate. No, had some decent numbers from the ISM last night or yesterday in the US session, and it's popped the markets up a bit. They haven't really. I mean, I think the expectation was for a decent number, and the market did start to pop before the number was released, but they've managed to hold their ground. Maybe a little bit flat as we start the session off. I haven't seen any real confidence filtering through, but there's not really anything that I'd want to trade on the open. I'm still really more interested in the short with the market with the current technical analytical standpoint. But the fundamentals don't quite match it yet, so we'll have to wait on see what's going to be a driver for the downside. So I suppose my bias is flat to long at this particular stage, but that's on a very, very short-term basis because my medium to long-term stance is for some downside, specifically with the FTSE. But
All right,
nothing.
mate. Orlando, how about you?
Yeah.
Anything urgent?
Well, I was looking at the DXY, at the US dollar currency index, and well, because of how it closed last week, last Friday, so bullish, I was looking at a break above the 94 level to start loading on longs on the US dollar, but that zone actually has been quite a big resistance, and I mean, right now, like Ash, I'm flat. I don't see
Okay, so
anything.
nothing urgent.
No, nothing urgent. But I wanted to ask Ash about equities. Mostly the FTSE and the DAX. Given the fact that the DAX broke with some incredible levels last week, and now it's rallying towards the 12.780 level, would you consider shorting the previous lows?
Mate, his answer will come to you after we place the pound US dollar trade, because that is something that we must do right now.
Yep.
And then we will go to you, Ash, where you can answer that question. If that all
Great.
works for everybody, it certainly works for me. Righto. Now, I did do as promised. We started analyzing this pound US dollar breakout trade last night in the US session, and the results of my first tinker with it were that we turned, what did we turn? We did a bit of a turnaround where the first week of our trial without the filters was a loss of 0.23%. With the filters added in the first week, the 6th of the 4th to the 9th of the 4th, we turned that around to a 2.49% gain. So that's a swing of nearly 3% just by adding one filter, which I will share with you in a few moments, because we are going to place this trade. Now, what has changed is, and I'll take you through this exactly, what we're doing now is we're going to trade the top of the range as always, but we're not going to use a buffer. We're just going to enter at the top of the bar, round it up a little bit, and we're going to put our stop loss underneath the bar for the long. Now, for the short, we're going to use, obviously, this bar as well. We're going to enter short below this bar. We're going to put our stop loss above this bar. So there's no tolerance here for a little bit of a whipsaw. I found that produced a very good result in the first week. We're also going to take a TP1, and if we're fortunate enough, we'll take a TP2 as well, and then we'll trail. So I'm just borrowing a little bit of strategy from my own system, and we're going to use that. So the first thing we're going to do is place a long above this bar here. You can see the high of that bar is 1.30872. I'll just round that up to 1.3088, and that will be our order. So it's a buy stop at 1.3088. And I better hurry up, hadn't I? Stop loss will be below that bar, rounded down, 130.61 will be the stop loss. Okay, place the order. We're in the order. We're nearly in the trade as well. Now, what happens next? I'm going to use my golden rules, which are do not trade beyond a resistance level without taking profit. Now, most often that's going to be a pivot, maybe DR1 or a swing of some kind. I'll use this level here. So that's going to be our TP1 level, 1.3100. Let's call it 1.3100, shall we? So we'll set a TP1 there. When we hit that level, we'll take 50% off and we'll move our stops. What have we got? We've got a risk factor of 27 points, let's say. We'll make our first take profit at bang on half of that. We'll remove half and move our stops 13 pips from entry, which will be about the bottom of that bar, very, very close to it. So I'm okay with that. So there's our first take profit there. We'll remove half of the position and we'll move our stops half the position in the opposite direction. So therefore we'll make it a free trade very, very quickly. And therefore we won't be in any stress after we've hit TP1, and we'll manage it a little bit further from there. So it looks like we have been triggered long into this trade, and I'll get rid of this. That's not getting rid of it. Go away. Oh, I know how to do it. I'll get there. Righto, there we go. TP1 is at, just those of you, 1.3100, as I said. That's our TP1. Don't forget to take it and take half off the table if we're fortunate enough to get there, of course. Righto, micromanaging this we'll get to a little bit later, but our TP2 primarily will be either at 1-to-1, which in this case will be the case. So 27 pips It will be just under DR1 there at 1.3115 will be our TP2. And then we'll start to trail. We'll remove a quarter of the original position at that point. So we're removing half here. We're removing half of a half here, and the rest we'll let run as a trail, 2-bar trail on an hourly chart. Righto, I'm sure you're all confused by half of that, but we'll further explain it as it unfolds, and hopefully, obviously, it unfolds in our direction. No need to place a short now because we do have the long in the market. Rightio, Ash, do you remember the question?
Yeah, whether there's a short on in the DAX. Now let me just bring the screen on. So, one second. Let's make sure I'm in the right place here. Right, the DAX. In fact, let's compare a few of these. We're seeing that the FTSE 100 actually having quite a decent little boost early doors this morning. So we'll go around the grounds. This is the dollar index, but we'll go around the grounds and just have a look at what's been happening really overnight and what's likely to happen to equities. And I suspect equities will probably get a bit of a boost, but I guess you're talking about a longer term play here, Orlando. So really on the daily time frame. Yeah. And you're talking about under this level here, I'm guessing, right?
Actually, Ash, I'm talking about the level above. After it broke with the lows around the 12,800 level, right? Now it's retesting those lows that it broke, and considering that the break to the downside was so strong,
yeah,
and it broke with the structure. The risk to reward ratio on the short, should this level be rejected, would be very nice.
Yes, yeah. So the DAX is definitely showing some signs of weakness here. I mean, there's probably a few different levels here, but that looks like a pretty good line and a pretty good trend line level, which means that our current bar is probably the one of huge interest. Because staying above probably 12 around about the 12,600 area is still bullish for the DAX. Breaking below that area, maybe breaking below 12,500 is looking a lot more bearish for the DAX. My concern with shorting the DAX specifically is that I like this economy more than I like many of the others. So this wouldn't be my flavor of choice. If I was shorting equities, I wouldn't be looking at the DAX. I get the technical picture, but I think the fundamental picture in Germany is nowhere near as bad as something like the IBEX. So let's look at the IBEX instead.
And I am with you on that. I am with you on that. I am with you on that, and that is why I was long last week on the DAX.
Yes.
Of course, that the GDP number crashed everything. But I mean, if you look at the Germany IFO Business Climate Index, it has been pumping since April. If you look at the Germany manufacturing PMI, it has been pumping since April. And Germany money supply M2 also pumping since April. So everything in the German economy is very bullish.
Yes.
But my concern is that if U.S. equities crash, that is going to be bearish for global equities.
Yes,
but that is a big if. That is a big if, right?
Yes, it is, and I suppose that's my point in many respects. That if the U.S. economies, if U.S. global equities do crash, is there a better option to trade short rather than the DAX? So even though I would completely agree that all equities will suffer if the U.S. economy crashes and the DAX won't be protected from that. Is it the one that would be the best short? I'd prefer to look at the FTSE, for example. This would be the option, the opportunity on the FTSE, which again has broken a significant level.
Yeah.
And if we were to compare, I mean, we were talking about the DAX a few last week, I think it was, a couple of weeks ago.
Yes, we were.
you know, the FTSE's already through. The FTSE doesn't really need any confirmation of another break of a level, where the DAX, in my opinion, probably does. The FTSE just needs a bar to get in on, which might actually, show itself by the end of today. If this bar ends up looking pretty bearish, that's going to suggest some further downside in the FTSE. So the FTSE looks like a decent option for a short. The DAX, in my opinion, would be a short to go long. And what I mean by that is if we can, you know, if we were fortunate enough to get the timing right on the DAX, and we shorted it somewhere around this point here. Let's say, let me just bring this in. If we were shorting it in somewhere, you know, around about this point here, and the market did start to break down and break down and break down, then somewhere in this area, I would have thought would be a good area to try and pick that one back up again. Now, if we are able to get this short down here, that means if we pick it up here, you know, we get some sort of signal here and we pick it up here and it continues to crash down, we're still covered with our short. So we can keep both trades open until the price comes back up again, taking this high out, getting these stops to break even, and then closing our short position. So that would be the way that I prefer to play the DAX, is by, you know, looking for a short, but just to go long. Or the safer way to play it is just wait until the DAX does come down, which I think it probably will, and then look for the long. So for me, any shorts in the DAX become a buying opportunity rather than an all-out sell. Whereas
Exactly.
I think that some of the other equities. Yeah, sorry, mate. Go on.
I'm sorry, mate. But you had just answered my question. So basically, and that is what I was looking on the DAX, right? Just technically speaking, I really like the level that it was rejecting at the moment, but I do like the fundamentals out of Germany. You know, I wouldn't want to be short, but the move to the downside can be significant. So there can be profits to be made there. But the thing is that I do believe, like you said just now, that a move to the downside would be just more like a pullback to pick up longs.
Yeah, I think so. And we've also got this as well, to as a level that looks like it will give us some confluence. So it looks like, you know, extrapolating this level here around about to this high, that gives us the same number, which suggests that if we do get under that 12,500, that we should see a significant move lower. Now, what may happen, and what would be much cleaner, would be if we can actually see a genuine reversal pattern. So it comes down, pops up, gives us that head and shoulders pattern over here somewhere, and then starts going down. So the first move may not be the move. That's the other thing with the DAX. We might even be waiting for a second wave with the DAX, before a second wave up, before we really want to take that heavy short on, to try and get the long back in later on down the line. So I think the DAX, you know, just to kind of just tie everything in, I think the DAX is a trickier one than many of the others. So I'd be waiting on the DAX for a long. I think if we're looking for shorts in US equities, the Dow to me looks really interesting. You know, when I consider the three, Nasdaq, Dow, or the S&P, the Dow looks to me like a really interesting option for a short. And where is our Dow? Where are you? There you are. So with the Dow, this looks like we are getting to the top end of a kind of range of a pattern here. So it's probably got a little bit further to run. Maybe another. Actually, doesn't look like a lot. Maybe another 1% raise. You know, point in the Dow, and then we're looking at this this triangle. So, you know, does it come back down here? Breaking to the downside may well be, you know, beyond, you know, what it can actually achieve. But it certainly looks like with the Dow, that there could be a downdraft again, bringing us down to possibly the lower end here. And maybe that becomes a buying opportunity, but it'd be interesting to see if it did break through that particular triangle, because if that was to happen, that would suggest a more significant move in these global equities to the downside. But as I say, I think that if we are bearish equities, then there are probably certain equities and certain indices that are going to be more susceptible than others. Dow in the US to me looks like a pretty good prospect. And when I think about this with any kind of logical thought, the Dow to me looks like the weakest of the three, because the S&P is kind of covered. It's got 500 stocks, which means that it can kind of hedge a little bit. If transport's coming down, tech might be doing okay. So that kind of mitigates a huge move to the downside with the S&P. If tech's coming down, maybe transport's doing a little bit better, or manufacturing's doing a little bit better. So the S&P, because of its broad spectrum of stocks, doesn't seem to me as susceptible as something like the Dow or the Nasdaq, which are much more specific indices. Now, we could look at the Nasdaq, but I don't at this stage see how tech is going to suffer quite as much as things like manufacturing. So the Dow to me looks like a decent prospect for a short. I've got a long on the Nasdaq, which is currently still running, and I'm sticking with it. I don't like the long. I've got to be honest. I don't like this long on the Nasdaq because it's incredibly high up here. But I'm far enough away just to kind of leave things where they are. Is it likely to continue its move to the upside from here? Probably not. But I'm going to stick with it just for a little while to see how this one unfolds, because as I say, I think I've got some time to react if things start to move to the downside.
And even if things move to the downside, there could be another buy opportunity around the 10,950.
Oh, I mean, unless we're in a bubble with tech, then I don't see really tech being too suppressed. I think that if the new normal is that we are more reliant on working from home, then it's kind of obvious in many respects that anything that is subsequent, anything which is going to be reacting through transportation is going to suffer, because people won't be using transportation as much. They won't be using as much energy to transport themselves from one place to another, because they're working from home. Now, if they're working from home, tech does well. As it has done through this whole period. The tech situation is doing very, very well. Now, the big story right now with tech is the Microsoft story. Can they get that deal done with TikTok? Because if they do, I suspect the Microsoft.
I hadn't heard about that.
Oh, well, there's Microsoft are trying to buy TikTok.
Really?
But because it's a Chinese-based company, Trump is trying to ban them in the States. Now, they've had meetings. Right, so you've heard that part, but so Microsoft have had meetings with Trump, and effectively here that they are trying to twist his arm to allow them to make the acquisition, and he's listening, and it's in Trump's benefit to listen, I suspect, if it's going to be better for the economy. So if they can get that deal done, and we've got to wait till September, but if they get that deal done, and there's nothing else that blows up with the tech situation, then I suspect we're probably going to get another leg to the upside. As tech continues to grow.
Guys, take your first profit on the pound now, please. Take half off and move your stops to 130.74.
Oh, look at you, mate. Hey, quietly at it in the background, eh?
Just doing a little bit, mate, for the team,
Yeah,
that's awesome.
Well done, man. That's my kind of general view. I think if we're looking for shorts, we should look at the Spanish economy and the Dow potentially. If we are looking to go long, then we just continue with maybe the more bullish economies like the DAX and potentially the S&P and the Nasdaq would be in my basket there. The question is, Orlando, what's going to drive us lower? At this stage.
That's exactly what I was. I mean, that's exactly my thought process. What is going to drive equities lower? I mean,
and if we wait for, sorry, mate, go on.
No, go ahead. I mean, maybe if the Fed, starts easing this round of QE, Of course,
Yeah.
it's going to come lower. And actually, I thought that that was going to happen because, of course, that the Federal Reserve doesn't want gold hitting all-time highs. So
Yeah.
my thought process for a couple of weeks ago was when I saw that that they were completely eliminating the repo operations and their swaps
Yeah.
were going down. Um, my thought process was okay. They're going to stop printing money because they don't want gold hitting all-time highs, and they expect another round of stimulus from the federal government.
Yes.
So that was my thought process for maybe a push down in equities, but of course that didn't happen.
Yeah, well, I think the thing with the what the Fed I think are banking on is the government taking up the baton of helping these equities continue their push to the upside, and there are meetings going on in Congress to see what if there is any other help that can be done from the governments, and whether Trump and his team can get something done there, which he's going to want to do. And if that's going to happen, then I think the Fed can take the back seat and equities can continue to push higher. Because the only other thing we then wait for is some kind of spat, some sort of global spat, maybe between the United States and China, which we know is coming. We know that
it has started. I mean, it has started. I mean, the conversations between the U.S. and China
yeah,
have turned a little sour.
absolutely right.
That hasn't had any impact on equities. And my
No.
question: how long can this go on? How long can this? Because I see, this V-shaped recovery that we all see in equities, in my mind, is super manufactured, right?
Mm-hmm.
Because it's all about liquidity, but liquidity does not equal performance from companies, right? So
No.
how long can this go on until until the reality of the economy um, is what we're seeing in global equities?
Well, yeah, absolutely, man. Well, and that's the old adage, isn't it? That the market can remain irrational longer than we can remain solvent.
Exactly, I eliminated that thought on my mind because of what you just said. I just trade what I see. If you cannot fight central banks. That's it.
Yeah, yeah. We just have to wait until till whatever is going to happen happens, and that's my point. If we trade on what may happen, then
That's
we're
wishful
being
thinking.
and it's very amateur as well. We just can't do that. We've got to trade on what's in front of us on a day-to-day basis, and not think that we know what the Fed are going to do, and what the governments are going to do, and what traders are going to do. All we can do is
Exactly.
trade what they are doing, and what they are doing is continue to push these equities higher. So.
Mhm.
I'm going to remain long on the certainly on the tech space, but I'm with you in as much that some of these others are under stress, and I think the FTSE is under major stress, and I'd like to take a short in the FTSE. We've still got lots of issues out in the UK. Let's look at these. Let's look at this bar in a little while and see what happens
Exactly.
with this in an hour, because we are at a level here. That yes, there's an inverted head and shoulders kind of forming on this hourly chart, but I don't think that's that significant when we look at this daily chart of breaking down this pattern. And that does give us some room, some further room to the downside. So it's just waiting for a signal here to see whether we have our timing right.
Exactly.
And
That looks much more like a breakout and retest of the broken level,
it does, doesn't it? Yeah, it
technically
does.
speaking. But the thing about the FTSE, I don't trade the FTSE, Ash, because well, I don't get it. That's it. I don't get it. I have never
Yeah,
I have never made money trading the FTSE. And that's okay.
yeah,
You have to do your profitability analysis, and don't trade the markets that you're not profitable in, and that's it.
yeah,
But the
yeah.
thing, but the thing is that now that I have you, With this push super higher on the pound, why it doesn't have an impact on the FTSE?
Well, the pound will have an impact on the FTSE. Let's have a look at the pound very quickly.
Probably a dollar move more than a pound move.
Exactly, Jeff. Exactly. Because is it because this rally is just based on more of a dollar weakness than on a sterling strength?
Yeah, so with sterling, the thing with the FTSE is it will have an impact on the FTSE, but the FTSE is an international equity market, so the pound will have a much greater impact on some of the domestic stocks. If just like it is with any country, if a currency starts to strengthen too much, then some of the domestic stocks will suffer if they need to get goods in to make their products. They're obviously paying more for their goods in, so their margins start to suffer. But a weak pound, generally speaking, is going to be good for the FTSE because of it being an international equity market. But Jeff's right. The thing with the pound is that this is really about the dollar. So we're seeing the pound dollar strengthen. If we look at the euro pound is pretty strong, in itself. So the pound is strengthened a bit over the last few days, but this is looking pretty weak. Generally speaking, the pound is looking pretty weak, and we're right on a support level with the euro pound. So possibly even another buying opportunity with the euro pound. And I think you could look right across the board and have a look at the pound. It's not had a bad time of it recently, but it's starting to rally a bit against the Aussie as well. But it's not that significant.
Good thing.
Yes, yeah, but it's not yet that significant. I think we'd need to see a genuinely bullish pound, and we're looking at much longer term timeframes to see that before it has a huge impact on the FTSE. This is the weekly chart, and certainly looking at this weekly chart on the pound Aussie, that looks amazing, doesn't it? I mean,
that looks super bullish.
Morning star, yeah, super bullish. So it could start to have more of an impact. But I think if we look at this, we've got really two weeks. The last 2 weeks we've started to see the pound start to strengthen. And if we compare that to the FTSE, the previous 2 weeks we've seen the FTSE start to weaken. So there is a correlation there. Whether it's a direct correlation and nothing else matters is probably inaccurate, but it does have an effect. That the pound strengthening will put pressure on the FTSE. But there are many other things that are going on that are going to put pressure on the FTSE. Really, earnings. The earnings in this country, HSBC is a really good example. One of the big banks, if not the biggest bank on the FTSE 100, in terrible trouble because they're so exposed to Hong Kong. And that's the thing with these international companies. If they get exposure to the wrong markets, as has happened with HSBC, then it's in all sorts of problems. And the FTSE also has some really big oil companies that's part of it. So one of the other things about the FTSE is, yes, we watch the pound, but we also have to watch what's going on with some international political with the international political scene, and also things like oil. What's happening with oil? It's flattened off a little bit. The rally that we've seen in oil coincided really with many of the global equities, but it did coincide with a rally in the FTSE as well. So the fact that oil's hit the brakes a little bit and the pound is starting to strengthen, it kind of opens the door for some of those companies to start to diminish their earnings, which is having an impact and an effect on the FTSE. And not forgetting some of the travel stocks as well. Which also will be impacting the FTSE. So it's not quite as fortunate as the S&P, where it's nicely hedged. The FTSE is very, very cyclical, so it does rely on the business cycle. And really, if you look at this, it's suggesting the business cycle is maybe in a lot more trouble than it's been reflected in some of the other equities, but specifically the S&P. And I think if you were to go to the US, you would think everything's fine in the world, but you check out some of these European stocks, not so good.
Okay, guys, just pausing there for a second. We haven't said g'day to everyone. Hi, Swee. G'day, Alan, Helen, Shukri. Who also said g'day? G'day, Juan. G'day, John. Hi, Lewis. You're a little bit late, mate. You missed the first part of that conversation where Ash is definitely looking for a short on the footsie. Don't think he's found one yet, but he's looking. And I think we're up to speed with all of that. I don't think there's anything else that we need to comment on at this point. Right, Ash. So we're looking for a short in the footsie. Orlando, what are we doing? We got a trade?
Well, right now I have one trade open. It's a short on the euro versus the Japanese yen. And let me share my screen. Hold on. Can you give me powers?
Thank you, Helen, by the way.
Yes, I can.
Very kind.
As soon as I find you, Orlando, there it is, Big O.
All right.
There you go, buddy.
Okay. So can everybody see my screen?
Yep.
Yeah.
All right, cool. So basically, I've been following the Japanese yen futures, right? I always follow the Japanese yen futures for my yen plays. And well, last week I took a short on the Japanese yen by buying the Swissy versus the Japanese yen at this breakout, right? But the thing is that it's looking quite bullish, and I have flipped completely to a bullish on the yen, mostly because of this. No, that's not the indicator that I wanted. I'm sorry. Mostly because of this. The reason that the reason that when we were trading at this level, right here, I was looking, the Japanese yen futures looked very, they were trading in such a small range, right? And I was looking at a break down of this structure, right? But this big volume zone held, and now we're rallying. And well, the thing is that I see the Japanese yen continue to rally throughout the week, at least. So, in that, having said that, I looked at the euro versus the Japanese yen, and let me give you my thought process on this, and please give me your opinion about this, because that's the most important things about this show. You know that that we talk about our thought process, about our positions, or the setups that we're looking, and to listen to other traders' opinion.
A regular think tank, mate, isn't it?
Exactly, mate. So I'm looking at. I was looking to buy the Japanese yen, right? And I saw the euro versus the Japanese yen at this spot, right, testing the 125. So I sold the euro versus the Japanese yen around these levels. Now my trade is taking a little water, which is fine, right? But my thought process on this trade was also based on a strengthening dollar, which I know that sounds a little counterintuitive, but when I took that trade, I was looking at this, at the DXY breaking above this level, right? And if you look closely, this level, if we go to a 3-day chart, this is a big level on the DXY, right? And I know that in the current market conditions, technical levels are not that important as fundamentals, right? Of course, we are super bearish on the US dollar. But the thing is that, for the past 2 weeks, and I think I talked about that with Jeff, right?
Yeah, mate, we had a good conversation about
exactly.
that, both looking for longs, yeah.
Exactly, maybe a recovery. And this spot right here, not only testing that level, but testing the structure, right? If we go back to the 8-hour chart or whatever, you know, and because of how strong, how bullish the DXY closed on Friday, I was looking at a continuation. So if I was looking at a long on the yen with some strength on the US dollar, that would mean, I mean, the strength on the US dollar would mean that the euro would depreciate, and that, I mean, and the play, and my play on a long on the Japanese yen would be best shorting the euro versus the euro versus the Japanese yen, because of the US dollar strength that was going to bring the euro down. So the forces in that currency pair were completely opposite. So so that was my thought process. What do you think about that?
Oh, it makes perfect sense to me, mate. Gee, I love that
Right,
chart.
it makes perfect sense. Of course, it's not working at the moment, but I'm still. I mean, my stops on the euro yen are all the way up here, so that's completely fine, right? I'm still expecting some recovery on the US dollar, and also if you look at the majors, right? Let's grab the euro versus the US dollar. Also, I mean, on all majors, I was looking at some kind of a pullback to bring, I mean, some kind of a pullback to bring more buyers into the market, right? The euro USD from these highs drop about 175%. So that's 200 pips. And if you look at the Aussie, the same thing, right? So I was looking at that scenario, and that's the only trade that I have going on right now, right? That, I was looking at that scenario and that play, and I mean, and I do believe that it's still in play. I mean, my trade idea is still valid in the sense that if we look at the DXY, we haven't broken with the previous low, right? And even we haven't broken with this key level around the 93.30. So, but fundamentally speaking, and I haven't looked too much at the, I mean, at the economic calendar this week, and I mean, there's not too many news that could trigger a big rally on the US dollar. So that's why this was more of a speculative setup.
Apart
But
from Friday, of course.
yeah, exactly. But that is what I'm looking at. And I'm also waiting on this. I talked about this setup. I mean, I've been waiting for this setup on the New Zealand dollar versus the US dollar for a while now, since the NZD USD was trading at these levels. And I'm still waiting for another leg up to test this massive, massive, massive level, right? And just look at this. I think that this could be a big short, and I'm not kidding. Just look at this massive, massive level. Hold on, let me grab the volume from the entire chart. Let's give it a minute. Even more. Right. So I was looking at this level right here, and but the thing is that we have this. I mean, we have this massive, massive point of control, or massive or big volume level around the 65, 55. That is going to be very hard to break with. But if we manage to break with this level and this current structure, I do believe that we can have a retest of at least the 6150. And I do believe that you said, Jeff, that you are keen of a weak Kiwi, right?
Absolutely. But against the pound more than against the
Against
dollar.
the pound, exactly. Against the pound more against the dollar. And have you taken a trade against the pound?
Yeah, mate. Yeah, we're about 500 pips up now.
Really? Can you share?
Sure, absolutely. Let me grab a chart here that's got pound Kiwi on it. There we go. And I will share with you.
Oops, I'm sorry, I stopped sharing my screen.
That's okay. It just gave me a little bit of a bump in the road. So yeah, we bought the pound Kiwi at 193.22. We're now at what, 197.90, so nearly up to 198. And look, it wasn't our best entry, to be honest. I was looking for an entry down here somewhere, but it just didn't turn up because that's where it started to take off, and there was no pullback really apart from that little bar there. But we traded this bar here. So we got in as a result of basically a break and retest of the top of our range here.
I see.
And we've taken profit here. We've taken profit here. And we're pretty much free trading. The reason I liked it so much, and I know where you're coming from with the potential big reward available, and that's what I see as a potential reward here on pound Kiwi. And that's why I was so keen to get into the trade. I think, maybe that level there is where I'm headed. Time could even go further, in my humble opinion. But yeah, more than happy to be in that.
I actually remember this chart.
Yep.
You showed this chart. I think it was like 3 or 4 weeks ago that you were waiting for that retest.
Yep. Yeah, that's right. All we were waiting for was this break or bounce scenario here off the bottom of this channel. So we're on the way. Whether we can sustain that is, of course, debate. I'm now waiting for a retracement so that we can actually get back into it. I'd love to see something come down here to the monthly pivot in this breakout area here, weekly pivot, monthly pivot, and I'd buy back into this again.
94.40, 94.50.
Yep. Yeah, around about there somewhere.
And that's a thing. That's a thing. I completely see your point about the weak. The probability of or the lower probability of a weak Kiwi against the USD than against the pound because of a weak dollar, right? So
yeah, look, my thing with the dollar
Uh-huh.
is, and I've sacked it. I'm actually not trading the majors at the moment. I'm trading the minors for the reason that I was waiting, like you were, for the dollar to turn around, missed it, and now I feel it's too late for me to capitalize on what we were waiting for. So I've turned my attention to the minors until the dollar hits a resistance level, and then I'll start to be positive Aussie, pound, euro, all against the dollar, maybe even the Kiwi thrown in there, but against the pound, no, I think. And it's based purely on technicals, because it just loves this little run up here. And that's really all I've got in my head at the end of the day. There's nothing about the miners. Big pardon?
The good thing about the miners is that when they run, right?
Yeah, absolutely. You get good bang for your buck.
Exactly. That's one of the reasons that I don't really like to trade, for example, the euro versus the US dollar, because the two currencies are so strong that if I decide to take a play on the US dollar, I'm going to look at the US dollar against a much weaker currency to get that run that I'm looking for, which is what's happening right here on the pound against the Kiwi.
Yep, right now she's all looking good. Of course, it won't go straight up there, and that's the challenge that we have always, traders. As you know, when do we take profit? When do we say enough is enough? Well, at this point in time, that's not where I'm at, because I've still got my stops where they were originally, because I want to give this plenty of space to come back, even to that trend line again, before it goes, and that would be fine by me. But I'll be looking to scale into this, as I say, off that level I mentioned before. So have you got any more, mate?
No, right now, like I told you, I'm pretty flat. I'm just waiting for some pullbacks this week, right? To get well, if you want, I can show you a couple of pullbacks that I'm waiting for. Yeah, let me show my screen.
Mate, we'd love to know what you're waiting for.
All right. So The one that I'm waiting for, really waiting for, is this retest of the 133 to 133.20 on the USD CAD. And again, this is another level that I have been waiting for a while. And the reason that I have not jumped long yet is because of this. I mean, this is not quite the test or quite the test and rejection of a level that I love to see before jumping on a trade. And also because I'm counter trend trading. I mean, this is a massive move to the downside, right? And I'm looking to get long. But if you look at this, I mean, this is a massive level on the US dollar, on the US dollar Canadian dollar, right? And if I were to take a long, well, I mean, if these two scenarios, if one of these two scenarios plays out, I will be taking a long. The first one would be another leg down and a new lower low and a rejection candle on a higher time frame above this high to take the long. But my favorite one, I mean, this scenario that I'm really looking for is really a rally above these lows and a retest of these lows. Why? Because we would be actually breaking with this super long-term bearish structure, right? And a massive level that you can see it's really protected by sellers. Okay, but the thing is that right now, to me, the US dollar Canadian dollar is trading no man's land. I would not touch it at the moment. But yeah, I'm waiting for either a big rejection, a big rejection candle, maybe on the 8-hour chart, on daily chart, or a rally breakout and a retest, so I can get an excellent risk to reward ratio to my first targets that would be around the 137. You know, but I mean, I'm still waiting for these scenarios to play out. You know, I'm being patient about it. And yeah, I mean, at these levels on the US dollar Canadian dollar, I would not trade it to the upside. Now, this is the scenario that I'm looking for. If the USD CAD continues on this bearish structure that is currently trading in and breaks with a 133, I will be looking for a retest right here of the 133 to go short, at least to the 132, 130, yeah, at least to the 132 for 100 pips. But I think that well, I favor the upside on this currency pair, and that's what I'm looking for.
Happy days. Let's hope we find a way into that one as well. Mate, thanks for coming in on Tuesday. This is going to be a permanent gig for you.
Yeah, thank you for having me. Thank you for inviting me. Pretty
no
excited.
problem at all. You just got to stay off the whiskey before you come on at 1 o'clock in the morning, I suppose.
Hey, I don't know. I don't drink. I'm vegan.
Oh, no. Just kidding. All right. So Orlando is looking for a long on dollar CAD, and we need to know, Ash, have we got a trade short on the FTSE yet, or are we getting closer, or are we getting further away?
I mean, yeah, there is. I mean, there is opportunities to trade the FTSE short. It would be a very short-term trade at this point. I think if we look at this, let's have another look at the FTSE again. But it's not, there's always opportunities in the markets, and it just depends on our time horizon, whether we want to take something that is going to give us maybe just a quick bit of profit, or whether we want to kind of let this one last a while. I'm still looking at this on a weekly chart, and there's no doubt that when we look on a 5-minute, that yes, there's a little 5-minute trend here that's broken to the downside. So opportunity just there. Is this one broke to the downside? Yeah, you could take that, and it's would already be at 1-to-1. But I'd quite like to see whether this will actually develop for us, just to give us something a bit longer term. So Still waiting on this hourly bar, mate. I'd like to see that hourly bar genuinely end up as a bearish signal. I am looking across the board and seeing some weakness come right in. Actually, when we look at this, some of these other equities here, S&P looks like it's just weakening a little bit off the upper level as well. Dow Jones, same kind of thing. Looks like that's weakening down there. We're looking at the Nasdaq also looking at weakening down at that particular point. Looks like a pretty bearish candle there. So looks like we are getting that weakness coming in. Let's have a quick look at the VIX as well. The VIX, maybe a little pickup in the VIX, but nothing looks that aggressive. So yes, there are shorts, and I think we're shorts because we're, in the same way we looked at the dollar for a couple of days ago because of the potential level that it's sitting at. That's really what we've got going on. Definitely a short because of the, there is a technical reason for us to go short here on the FTSE. As I say, I'd like to see this one break down first. So let's see if we can get this hourly just to break down like that, probably. Let's flip to another time frame. Yeah, looks like if we can get this, the hourly to break down. So let's see what happens in the next 10 minutes. If it's down here in 10 minutes, then as that one pulls back to the upside, then yes, we can start looking at the short opportunities. It might it's there already, but if we are going to trade this now, what we're going to be doing is putting stops at the high, which we probably should do anyway. But I'd quite like just to see if it closes down there, pulls back, then we can take it here with a stop at the high. So what I'll be looking at potentially while we're off air is the chance to put, in actual fact, let me bring this onto a price that you guys can actually look for, because these are the futures. So on this, looks like the price is around about the 60.55 level for a stop, and that will lead us to around about the 60.25 level for a trade. So the idea will be after the hour. So let's wait to the hour, and we're going to go short. FTSE at 60.25. And that's the entry, and the stop loss is going to be 60.55. Targets could all certainly the first target. So a TP1 is going to be looking for those lows again at the bottom. So you can see we got some time. don't need to jump into this just yet. Around about the 58.55 level for a take profit one. So there's plenty of room. Yeah, that could be a near 200 pip move to the downside. So yeah, let's wait on that, mate. But it's going to be off the pullback. I want to see it close down here first, really on the hourly, and then after that, I will see whether there's an entry that I like.
Yep. Okie dokie. Then I better have a look around the grounds, I suppose, which we haven't really done yet. See what I can see.
Yeah, just incidentally as well.
Yep.
It looks like there may well be. I think the monthly pivot is going to be a shade high. That might be a little bit high. We might bounce away from the weekly pivot before we get our entry. So if the entry hasn't happened yet, that does make this area, an area that we need to start managing. It could be a take profit area, but I'd prefer to see it come through there and wait for this one on a longer term basis. But you can see if we're aiming down here, we can't dive in. We want to let this one establish itself and make sure there is genuine weakness here. But it looks to me like that monthly pivot could be a little bit high for an entry. I think we're probably more likely to get an entry on the low of that bar. So yeah, I think the 25 level is right. But yeah, that's where we're at, mate. Just going to wait for that one.
Right, buds. Let's, as I say, have a look around the grounds, and we'll tackle Shukri's question first about the RBA decision today, which of course was to leave interest rates on hold at 0.25%. The statement was far more complex and involved than I can remember seeing an RBA statement for a long, long time. And I guess that's a sign of the times. There are many, many scenarios, as Philip Lowe said, that they are looking at across the board and even outside the board and upside down around the board, even mentioning things like childcare, which, of course, has been stimulated, if you like, or compensated. I'm not sure what the right word is for that. Across Australia here, trying to keep the mums and dads who are normally looking to have their children in childcare, that's been pretty much free for the last, well, since COVID became COVID, I suppose, back in February and March. But on balance, I thought there was certainly a bit of a hawkish attitude by Governor Lowe, but he, at the same time, and in the very next breath, said that they will, in fact, more so than they did last month, said that they will be purchasing assets as and when needed, rather than we don't see a need at the moment to be purchasing more assets than we have. And that's been kind of the mantra for the last two statements that I can recall. But he did go into the fact that they were more than, as every, government or Reserve Bank is at the moment. So there's no difference, I guess, in what he's saying as to what the Fed's saying, as to what the BOE is saying. They're all the same. And they have to be, because they have to accommodate the economies. Otherwise, we're all in deep SH1T. There's no question about that. Are we delaying the SH1T? Probably. In my humble opinion, we are, and I'm not sure what that looks like out the other side. What we've got to do is find the other bloody side, really, isn't it? That's where we're at, and that's what they'll continue to do. The Reserve Banks have just got a duty to continue to ease and more ease, I suppose, and we just have to go along with that. It's scary, I've got to say, but what else do you do? What happened with the Aussie? Well, let's go back to that time frame. Where are we? There's 5:30, 4:30, 3:30, 2:30. There's the announcement right there. Nothing. Market did nothing. Had a little bit of a tiny rally and then came straight back, hit the daily pivot, and now we're going to oscillate by the looks of things between the daily pivot and the weekly pivot. So again, going back to my former statement, I'm just sacking everything against the dollar at the moment, because I'm not in sync with what the dollar's doing. So to the miners, and when I started the week, I had 4 crosses that I was looking at. Now I've got 7. I'll go through them. Helen, yes, I'll get to that, absolutely. CAD Yen was the first that I had on my watch list this week. And I was looking for a long as a false break of a support trade line I had coming through here. That is the weekly chart. I'll go a little bit tighter than that. There we go. So we hit the bottom of our range. We came straight back into it and back above the broken trade line. That's a classic 3/4 of a slingshot false break scenario. What we wanted to see was a retest of that trade line, which we got, but this needs to be a bearish bar for me to trade it. As always, I don't trade bullish bars long. I trade bearish bars long and bearish bullish bars short. So therefore it didn't set up. On the 4-hour chart, it kind of did, but it was a little bit ugly and it didn't really come back to the pivots as as is my want. Therefore, there was no trade. And had you got into that, you probably would be trading for free at the moment, but that's about as good as it's got, really. and nowhere have we gone since. What happens next? Good question, but I'm anticipating that we'll get to the top of this range, and when we do, I'll then be looking for this to turn around. So the long has probably gone from my want list, and I'm now seeking probably a rally up to look for shorts. Aussie yen was the next that I was looking at, and this was quite the reverse. I was looking for, well, actually I was looking for either, but it did set up again, this time as a false break on the other side. And I was quite keen on this because we did get not only a break back of the trend line or trade line, but we also got a break back of the top of the range, the weekly pivot, the monthly pivot, the daily pivot. What else can I throw at it? This is about as good as a setup as you're going to get. The bar I didn't like, as I said at the time, it was a little bit too, let's say, spinning toppish, and a little bit big for my liking. Had it just not given us that tail and been a bullish decisive bar, that's precisely what we're looking for every single day of the week. And that would have been A-OK. The order's still in the market, and there it is if you want to follow that. I'm not cancelling it at this point. What, however, I will be doing is looking for a better entry. That may well come as, again, a false break, this time of a different resistance level. So if we broke above here and got a close or a couple of closes around about the DR1 mark, then we shot back underneath here, back into the range in particular, and again underneath these pivots and retested that, then that would be my signal to go short. So I'm still leaving that in the market, but I will be looking for a better entry, still biased to the short side on Aussie yen. Kiwi yen is exactly the same, but spat up a bit of a quandary for me. I was going to place this short last night, I think in the US session, and it gave me a little bit of cheek actually, because it really didn't get back underneath my trade line, and that's what it has to do. Rather, it refused to do so, and it continues to refuse to come back underneath that level. It is just skipping along the weekly pivot, which really hasn't changed from last week at this point in time, which makes it a little bit confusing for me. I thought this was a dead ringer to go short, having broken this previous range, retested it, but there again, there it ends. We're really just hanging around doing nothing. So I want to see something a little bit more substantial than what I'm seeing at the moment. That may well turn out to be a long, and this bar here is probably a good indicator as to where you might like to do that. I'm really looking to play the double top and lower high. That's my analysis, but it's just not giving me what I need at the moment. So it may turn into a long back up to here to challenge these highs, and then we can look to play it short from there. But until we get underneath that trend line, I won't be trading it. Not short anyway. Euro pound's another, and we're simply waiting on a retest of the bottom side of this channel. I'm not sure if we can get enough energy in the euro against the pound to do that, but I'm hopeful that we can, because I think there is the appropriate place to go short euro pound. Is there anything on offer for us before that? And you can see by this range that we've gone into that that's going to be very, very difficult. I don't even want to play that range. It's a little bit too messy, but having said I don't want to, I would trade it long if I got down to the bottom of it. And the reason is I want to see that retest, right? So let's do what we do best and put in a rectangle. And that probably starts around about there-ish. So we're bang on the top of it right now, in my humble. So watch out for this one. If this sneaks back inside, having got outside, and then produces a lower high, it may be well worth a short, only down to the bottom of the range. No, you'd have to leave something open, actually, just in case we don't come back and test that area there, that I think we shall. But in case we don't, you want to leave something open for that short, which is of course our bias now that we've broken that structure down. And I think this may well have a very, very, very big future if it can get a wriggle on short. So that was the four. No, Kiwi, yeah, I've been through that. That was the four I was looking at. Placed an order this morning on EuroCAD, if I can find that one somewhere. EuroCAD, come. There it is. Okay, so I placed an order short on this one this morning underneath this bar. And that, I said at the time, maybe a little bit early. And what I'm really playing here is a break and retest of this area here. But it's also, as always, what I'm looking for is a break and retest of a trend line or a trade line. In this case, that one there. I did say it might be a bit early because we may well come back and retest the weekly pivot. But that's good enough for me to go with. And for that reason, I've traded short underneath it. We're getting a little bit away from there, and maybe the stop needs to be above the swing. That, of course, will reduce our reward on this, and the reward in the first instance only at the monthly pivot or just before the monthly pivot. So I see that as a problem. Why? Because I don't like to have less than 1/3 of my risk as TP1. Let's say we've got 105 pips there. We need 35. Well, we're okay with it. So I'm going to do that. I'm going to change the order, whose entry is at 1.5705, but I'm going to move my stop loss to 1.5805. Is that right? Can't be right. Let me get that right. No, it's not right. It's 1.5815. So I'll just move my stop loss to 1.1585. Sorry, 1.5815. And my TP1 will remain at the same level, which is at 156.65 or 40 pips below entry. I'll remove 1/3 at that point and leave my stop where it is. And then TP2 probably has to be taken around this level, 155.70, and then just let the rest rip. And hopefully you get something down here at some stage. And that'll probably be a good exit point around about the 154 mark, I should imagine. We shall see. So that's EuroCAD. Two others I'm watching. Kiwi Swissy short. Kiwi Swissy will be around here somewhere. Somewhere. Is it up here? Nope. Must be down here then. Kiwi Swissy. There we go. Now, this is a play that I like. Again, very, very similar to what I just described on EuroCAD. And that is a break of this level here, which has just been broken but retested, and a weekly pivot test as well. It's also a high test bar and arguably a lower high. I don't really fancy that description as well as it should be. It's not really a break test of a trade line either. I haven't placed the order, by the way, but I am looking for the short, and I wanted to get back up here to play a better one. But this is really a shot over the bow, and I think if that candle breaks, then there's probably some free fall about to happen. We've got a bearish engulfing bar here. Definitely got a lower high. We've got a lower low. We've now got another lower low. And that's why I was waiting for a lower high in this vicinity. And that's why I haven't traded that bar. But if I saw that bar up here, then most definitely I'd look to trade it. And finally, dollar yen. Still bursting my little boiler to get short dollar yen. And as yet, haven't been able so to do. Maybe this is the opportunity that I'm waiting for. So on the daily chart, we've got this big key reversal bar. Now, I call it a key reversal bar. Some people would not, because it's got a bullish body on it. I don't care about that. What I see is a higher high and a close not on its low, but it's not too far from its low. Arguably, you could say it's closer to the center than it is to the low, and you'd be right. But if I see today's bar as an inside bar, I would trade the inside bar short. And that will be my thing for the morning. Okay. So if that bar looks like that, I'll enter short below it with my stop loss above it. And certainly I'll be taking profit at the weekly pivot. You could now, if you so chose, put an entry underneath that daily bar of yesterday, and you could put a stop loss above that daily bar of yesterday. There are far, far worse trades to take. You'd have to take profit here at the open of the day before, which was last Friday's bar. And that would get you around about 1-to-1 for your first take profit. But definitely you'd have to do that if you wanted to trade that bar. I'll be looking for this one to trade tomorrow morning, as I said. And that, folks, is my watch lists. And because, as you've seen, a lot of them are going in the opposite direction at the moment, I don't as yet have trades. But also because they're going in the opposite direction, it gives me the opportunity to trade back to where my entry is on the smaller timeframes. And if that sets up for me, then that's precisely what I'll be looking to do. I don't see anything there at the moment for Aussie yen, but there may well be a little trade line coming through here that I can look at a little bit later. Of course, I now go to dinner. I won't be in front of the charts for a while, but if this were to, no, I really want to see a resistance break. I want to see a false break of resistance. So if we up here, under here, retest, away we go. And it's the same on every single one. There's no change. Every single thing that I'm trading is going away from us at the moment. And that can be a good thing on the 30-minute charts. It can also be a good thing on the bigger time frames as we get closer. Euro pound takeoff. Has it taken off? Euro pound to the high side, I hope, because I don't want it to go short yet. Euro pound. Oh yeah, good. Okay, that's where we want it. Happy days. So I'll be looking at that on the next 4-hour chart to see what that candle looks like. If it is a bullish looking bar, but has a nice tail on it off the monthly pivot and the bottom of that channel, then yummy. I'd look to trade that short. It's only 48 minutes away. Now, Helen, and some of you who are in the room will have, sorry, Ash, have you got any more? Or Orlando, have you got any more?
FTSE is now retracing, so there will be a selling opportunity coming up. But aside from that, no. I'm just looking at that euro pound. Yeah, very interesting move on the euro pound, isn't it? I think there's time to get into that one as well. So again, I think that one is a long ultimately.
Yeah,
oh, you like it as
exactly
a long?
what I
I
was
like
looking
it as a
at.
short.
You like it as a short?
I like it as a short. Yeah. Why? I hear everyone in stunned silence because we've broken this structure. That's why. And a retest of that structure gives me a short. Entry may be a little bit interesting, but as I said, if that bar is a bullish bar with a bit of a tail on it off these levels, I'll be looking to trade that short. The other option, of course, if we break back above and inside this range and then retest it from above, then I become a bull. But
It's
until
interesting,
that
mate.
happens,
It's interesting. Because the trend line I'm looking at actually is on. It's about the 3rd of June.
On a daily, mate.
Yes, on the daily.
3rd of June, yeah, here, and you're coming through here.
Yeah, which is interesting because that gives us that support line, doesn't it? But it's interesting you got your trend line there. That does look like a target, doesn't it? That it's got to get through. If it gets through there, then the Bulls are back in charge. But
I
yeah,
agree.
you're right.
Agree 100%.
Maybe we're in a bit of a crossfire right here, and it's maybe a bad band to trade in. Maybe it's got to be either side of that line. Might be the safest play here.
But in any case, the pound is weakening against almost everyone.
Yeah, I mean the pound shouldn't be strong. It's a very weak currency.
The one that I'm looking at right now is the pound against the yen. Looks extremely bearish, but to me, there's no setup to trade it.
Yeah.
But that 139 level is super strong.
You liked that long a couple of weeks ago. Have you flipped on that?
Actually, I closed my longs at around the 136.50, and I missed the last part of the long, you know. Yeah, I mean, I missed last week's rally, but that 139 level is quite strong, and because of price action on the last 3 or 4 hour candles, you know, I see a lot of rejections there. And if we manage to trade below the 138, I could see the pound against the yen pulling back to the 136.50, which would be a great buying opportunity.
So I'm just trying to get your chart up for you.
Okay.
There you go.
So you see right now, we are rejecting the 139, right? And if we manage to break with the 138, I could see the pound against the yen dipping or pulling back to the 136.50, which are the previous highs, which would make for a perfect deep buy on this market. Because I mean, like I told you a couple of weeks ago, Jeff, I still see this. I mean, the potential to the upside is quite massive, you know. But holding on a trade for so long, it's also quite hard, you know. But the next deep buy that I see on the pound against the yen, it's the 136.50. If we reject the 139 and we trade below the 138, I reckon. But yeah, I mean, it looks pretty weak. Not that it looks pretty weak, but it looks like it's going to pull back.
Yep. Okay. Are we done, guys?
Yep.
Yep.
Righto. Just briefly for you, Helen, and I'm sorry I never ever have enough time to go through this, but those of you who do have a trade manager and look to use the Slingshot as a tool, let's say we're going short here, right? What is it, pound yen? So Slingshot on the 30-minute charts, you will notice, and when on the 30-minute chart, you will notice that there are default settings as a +6, which is TP1, and a 30 pips, which is your target. Now, the reason they are there is because of history and no other reason. They are very, I won't even say arbitrary, but they are flexible, very much so, based on support and resistance areas. So it's very difficult to say use them with an absolute number in mind. And that's exactly what we've had to do to make them automated, right? They are conservative. So the 6 pips that we're talking about, in particular on minor pairs, 6 pips on pound yen, for instance, is nothing. It'll do that in a heartbeat.
Sorry, mate. I'm going to ease into the FTSE here. I'm going to take a short in the FTSE. I can quickly grab the screen.
Short pen. Yep.
Let's get into this here. No, pretty nice move back to the upside. So just taking a short here. We can move stops up to these levels just above. So might be better to get above this area instead with a stop. But it's still got to get through that. Oh gosh, wrong one. It's got to get through that monthly pivot still here. let's get the stops out of the way. We'll put them at 70, but we won't allow it to go up to that particular level. But I like the fact that we've got this level. It might just cruise a little bit higher, but you can see that there's 2 points of resistance here. We'll put up a little fib as well. So we've got horizontal level break. Looks like a pretty good level for a trade here as well. We've got a little trend line break here, and I'm going to ease in. I'm not going in heavy at all. I'm going to see if I can add to this later on down the line. Trend line break, horizontal level break, nice pullback, bounce off the weekly pivot. We'll aim down here. So we'll just see if we can get this one to develop a little bit, which is why we want a stop well out of the way. But it's got to take out that monthly pivot even just to get started here. So it's got 1, 2, 3 areas to get through. So we get the stops up at 60.70, entries around about the 60.20 level, between 60.20 and 60.15. But it's basically where we are now. And what was the other thing I was going to say? Oh yeah, just a quick fib. Let's just do a little fib on this particular point here, and we'll bring it up on a 15. 50% retracement of the move from top to bottom. So there's confluence here. So I quite like that as a technical areas to trade from. I've got very little confidence in the FTSE, so short in the FTSE is triggered in, and we will see what happens with that.
Mate, what was the chart you were trading on?
UK 100s.
No, sorry, the time frame.
Oh, sorry, buddy. Just on the hourly. I was looking at this on an hourly chart. We wanted the hourly to close below this area here and pull back. So we've got the close below. Now it's pulled back. I'm not waiting for this hourly bar to close. I'm just taking the level now because I've got my confirmation that we're looking for downside with this bar. So as it pulls back, I'm looking here. But you could, if you want to kind of break it right down, you can look at this on a 5-minute chart as well and say that there's the resistance point. We've just rejected it a little bit. That there is some short-term time frames that we can also look for. But and if we're being completely honest about this, or not honest, if we're being completely transparent, we're not really trading the 5, and we're not really trading the hourly. We're really trading the daily. That's what we're really doing.
Okay, that probably answers my question.
Yeah.
My question was going to be, on the hourly chart, you seem to have a left shoulder formed.
Yes. Well, yes, you're absolutely right. The inverted head and shoulders. Yes, you're absolutely right. Which might put pay to our move. Maybe the timing's wrong. But what drags me towards the FTSE and to take it here is that you look across the board. S&P down. The CAC Iran down. The last hour down. The DAX last hour down. The NASDAQ last hour down. The Dow Jones Industrials last hour down. I don't think we need too many more signals to suggest that the equities are in a bit of trouble here. So inverted head and shoulders don't really play a part from from that perspective. I think if we look at barometers across the board, barometers are suggesting that we're going to get some weakness over the course of the coming session. So it's worthwhile taking this trade short.
Happy days.
And also, you have put your stop losses above that inverted head and shoulders confirmation breakout.
Yeah, exactly. Yeah, we'd shove the stop loss up there. I haven't done it yet, but I can do it now. Shove the stop loss up here, and then that gets us out of trouble. If it does start to break to the upside, then just might suggest our timing just slightly out. But we can continue to potentially look for shorts if it doesn't gather some pace here, because we have to recognize, and everybody needs to know this, that you might have to take 2 entries on a lot of the trades that you get into, because if we think we're going to get the timing right, and we might get the direction right 70% of the time and the timing right only 50% of the time. So that means we don't just discard our directional bias just because things have changed on an intraday basis. So it could do that, but then all of a sudden we get another signal up here, and we can take a different area. So we'll trade it there, and we'll have a tighter stop. So it's a short right across the board. We might get taken out on the first one, which is why we go in light. And if we get taken out, we'll go in light again. See if we can get into the trade. If it starts to run, then we can start to add positions maybe there, or if there are other pullbacks, we can start to add on certain points on the way down. But easing into it right here, just to sort of say, I like the downside overall, I'm not going to be arrogant enough to say that I've got the timing absolutely right, because there's a 50-50 chance I do. But there's a higher percentage chance that I've got my directional bias right. So I'll ease in, maybe get taken out. We'll go short again, and we'll go short again until we get confirmation that we're actually looking for a long, which is actually going to be taking out that particular level there, maybe even the high there. So not until 6,200 do I shift to a long bias on this.
I agree with that.
Excellent stuff.
Righto, guys. I will now try again, Helen, to to explain to you what the well, not so much pitfalls with the EAR and the.
I've got to shoot. Sorry, guys, I've got to shoot. I just realised the time. I've got to get out of here.
Yeah,
so
you got to go. You'll get sacked if you don't.
I will get sacked. I'll see you all in the US session.
Righto, mate. See you later.
See you later, guys.
And Helen, for you, let me go through this, and it's pretty easy to understand when you've got the hang of it, right? But if you pull up the EA and select the slingshot, here's what you get. What cross them on pound yen perfect. If you're going to actually see it, we'll just leave the risk where it is. You know all that stuff. If you were to use the default settings, right, they will give you, I think, a +6 on a 30-minute chart and a 30 pip target. You remove half at, or a little bit more even. I think I've got it set at 0.55. Let's place an order very, very quickly, and show you what I'm talking about. So let's say we go break of the current bar, which is 0. And we're a buyer. It's got very little chance of that happening, so that's all good. So what happens is this is defaulted to take a 6 pip profit. And that, again, is based on euro dollar on the 30-minute chart, because history tells me, and many, many times of trading it has told me, that under a compressed, if you like, average true range of somewhere between 50 and 80 pips, 6 pips is just about the right amount to take at TP1, and the target is just about right at 30 pips. So that's why it's set at that. Now, on pound yen, this will be completely and utterly way too few pips to take, because, as I said, in a heartbeat, pound yen will move 6 pips, and then it'll just move 6 pips the other way. And yes, you'll get a lot of break-even trades, but you'll get very few that actually get through to your target area. So you've really got to use a little bit of license and common sense there. So if you were to take this trade, for instance, you wouldn't put your take profit there at 6 pips. You'd use another level, probably a better level, and that would be a horizontal level. And I would say that one there is probably better. So whatever that is, 138.80 versus 138.69, there's 11 pips. That gives you that little bit of extra wriggle room for when you move your stop loss. Of course, you move your stop loss, as we did on pound US dollar today, 11 pips from entry once you take your 11 pips off the table. The 30 pips becomes a little bit visual. And you're looking to use things like DR1 or swing highs or something like that as your target, rather than the 30 pips, which is preset, right? So I hope that explains that bit for you. The dollar pairs, I think you can safely use the default settings, but on the minor pairs, you probably need to use a little bit more for your TP1 and target progressively. So I hope that clears that one up. On the 4-hour charts and the daily charts, you've got different presets, of course, but they are very much a case of, okay, I need to look at the levels. So you should always see me. If I don't, then you can kick me up the butt. But my TP1s are always at strategic levels, and that will be maybe yesterday's. Well, if we're going here long, on a 4-hour chart, my TP1 would definitely be no more than than just below DR1. and my TP2 would be at another strategic level, probably DR2 or a swing high or whatever the case may be over there. So they won't be at the default settings, which are 15 pips and I think 120 pips as target, and TP2 is at 45 pips. So those presets, whilst they are again valid for euro dollar long term, that does not necessarily mean they're valid for any other pair or any other cross, certainly not the miners, because again, the miners travel further quicker than do the majors. So you've really got to use levels there, but use those 15, 45 and 120 pips as guides, if you like, on the 4-hour daily and any bigger time frame that you choose to use. They will serve you conservatively well over time, those presets, but they won't make you a whole lot of money, that's for sure. On the miners I'm talking about. Does TM do the stop loss? Yes, it does. Absolutely. If you use the default setting. So if you used, let's get rid of this, delete. If you use the default settings, and again, if we use 0 as our shift, which is the current bar, and use breaker bar, we want to go long, then you've automatically got your entry, your TP1, your TP2, and your stop loss. They're all there. So everything's there. You can go to sleep on it. But I would definitely be using levels rather than those presets on the minor pairs. Majors, not a drama, but on the minor pairs, you definitely need to be using levels. Otherwise, you're just going to be getting break-even trades almost 90% of the time, which is, of course, an insurance thing that we've built into the strategy. And that's exactly why I've now chosen to use that on our breakout strategy, because look what happens if you go into a ranging situation, which is really what has cost us any money that we've lost in the past using this breakout strategy. We get a little bit of a tip in, and then we get tipped out in the opposite direction when the trades go bad. When we get a genuine breakout, of course, it makes up for those. But if we don't get a genuine breakout, then we need to mitigate our potential losses on that. And, you know, the TP1 method of trading, the free trade method of trading, is almost genius in its design, because it does save you so much. 45 on the 4-hour is TP2, and 120 is your target on the 4-hour and daily charts. 15 is your first take profit on the 4-hour and dailies. Okay. So we have picked up one thing that has already saved us 1% of our account, just by making that one change. Today we've saved 1% of our account, and we made on the first week, as I said, we turned that from a negative 0.13 to a positive 2.49%. Alan, why are you sorry? On miners, Helen, use the levels, use your pivots, use your swings, use your support and resistance as you take profits. Yes, definitely use euro dollar first. Absolutely. Ask me to repeat the last parts of what I was just talking about here on the pound. You can't understand. Okay. Maybe you weren't in earlier. Here's what we're now doing on the pound, the OCA trade, right? Instead of trading 15 pips above the high of the range and 10 pips below the change that I've made, is we're now trading the bar. So in this case, it was this bar. We traded that long, and we set a first take profit at a strategic level. Just what I'm talking about, Helen. Strategic levels are normally very clear on 30-minute charts as to where you need to go, and hourly charts. And why are they strategic? Because that's what happens. That's what happens. And that's the whole point of the exercise. So we've changed, Alan, to trading 15 pips above the bar and 10 pips below, sorry, above the range and 10 pips below, to trading the bar itself. So the bar that produced the high of the range, we're still using a 3-candle range, but the bar that produced the high of that range, we're going in the market above that bar, rounded up. So if the high of the bar is, in this case, 1.30872, we round that up to 1.3088, which is what we did in this case. And the low of that bar, which is 1.30618, we round down to 1.3061. So down to your nearest pip, up to your nearest pip. Then if we're going long, we trade that bar. If we're going short, we trade that bar because that's the bottom of the range. That's the top of the range of the last 3 bars. Then we take our profit at a strategic point or 1-to-1, whichever comes first. At that point, we remove half of the order. So if we're risking 1%, we remove 0.5% at that level, which we did. And whatever that level is, I think it was 11 pips today or something like that. Actually, it was a bit more, 12 or 13. Then we move, 13 it was, that we move our stop 13 pips from entry. And as you can see, we then got taken out at break even versus getting taken out with no profit in the bank at -1%. Okay. Got in around 5%. I take profit 50. Yep, 50.55 is perfectly fine. How do I decide that strategic level? Okay, it is the first resistance above entry, basically. You can see that there's resistance here, resistance here. So it's the first resistance above entry, and it's better than 1/3 of the risk of the candle. So in this case, the candle's parameters were 30.88, 30.61. So what's that? 27 pips of risk. As long as we are greater than 1/3 of that risk factor and we're at a resistance level, we take TP1. If that resistance level is less than 1/3 of the master candle, then we don't take the trade. And that is also part of it. But we'll just continue to go through this as time goes by. And you will find, as I have over many, many years, really what I'm doing is I'm imposing my own strategy, my own 30-minute strategy into this breakout trade. And already it's proving its worth. And that's why I do it, because I'm a conservative dude and I hate losing. Okie doke. Righto, guys. Then we are there. We're at the end of today's session. Goodness me, we're over time as well, but that's okay. Now I get it. Now you want to have enough meat. Yes, before you trigger. Exactly right. But your next question is, okay, go on. If not for long, yes, absolutely. No. That's all fine, Alan. Yes, we still have OCO. So whichever one triggers, we still cancel the other, most definitely. So in this case, if we were going short, we would have gone short underneath this bar with the stop loss above this bar, rounded up and rounded down for our entry, and our first take profit would have been at a strategic level. Now that strategic level, in this case, if we're entering here, is probably there. Why? Because it's been resistance here and it's been support here. So that level, we then determine what that level is. It's 130.34, also 1.3034, which would be well outside of our 9 or of our 1/3. Our risk is 25. Our reward at TP1 is 26. So we've got 1-to-1 there already. Perfect. Excellent TP1. Yes, you do, Helen. That's very true. Sadly, it's true, and it's been true all my life. I've had to do things the hard way, and generally that's cost me money, time, sweat, worry, all those sorts of things. That's why I trade the way I trade, because I'm not in too much stress for too long. Yes, once we're triggered long, we don't take the short. That's right. Although, that said, we will be looking at that as a another way to trade this breakout, but it's not yet. It's not for now. It's far more complex than you might imagine. What a journey indeed, Helen. It has been, and wouldn't trade a thing. Yes, I would. I'd trade shitloads of them because I want my money back. I got my money back. I'm more than happy. So all good. Early in the piece, it was looking a bit dodgy, I've got to say, when I was a much younger person. I could have gone horribly wrong. I will leave you guys alone now and back for the US session, of course. Those of you who will be with us, there will also be a strategy leader TTR for the slingshot coming up at, goodness me, 7:45, I think it is, in Singapore, Hong Kong. And we will look to see you guys tomorrow. Have a great rest of Tuesday, guys. Bye-bye for now. Good, Shukri. Looking forward to it. Yes, the Ethereum 100 times train. How interesting. Swee, you haven't got the link. I will see if I can do something about that, Swee. Thank you for letting me know. See you guys. Are you still there, Orlando?